Hi everyone. Today let's talk about oil, as well as the Fear and Greed Index. Then we'll take a quick look at the economic calendar. Then we'll get into the charts, as well as my results for the week and my thoughts going into the Monday session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open, as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So oil hit a new record high for demand, and we're definitely seeing that in the price of barrels, as well as XLP continuing to rally. We've been covering that on the channel. We've also talked about how China and India are continuing a bigger reopening, and they're continuing to need more oil in order to do that. And you can see that here since mid-July. Price of oil per barrel is getting closer to that $90 mark, and that has driven up the oil and gas companies. In terms of OPEC, they have been continuing to maintain their current levels of output, so we're having increased demand with flat supply, which is obviously going to lead to higher prices. Moving over to Fear and Greed, we ended up at 66 for the week. Previous read was 67. 1 week ago, we were at 69. So we're definitely seeing a little bit of a pullback in markets. You can see that here, pulling back towards the 125 SMA, currently sitting at that 42.17 area. Stock strength, still in extreme greed. Breadth, they're saying extreme greed here, but you can see it's been pulling back, and we've been covering that on the channel. I would argue that this is starting to get closer to greed. We'll see how that plays out for next week, but I definitely think this trend is pointing to a little bit of weakness. Put-call ratio now in neutral, which is interesting. Market volatility still neutralized. We've been talking about that one for a while. Safe haven demand in fear, and then junk bond still in extreme greed. I also found this chart here from Reventure Consulting showing the debt-to-income ratio for home buyers, highlighting the difference between current levels and the 2008 crisis. You can see anytime we get into this 38 to 40 area, that tends to be a topping formation, and that's exactly what we're seeing right now. Even with interest rates as high as they are, we're still seeing home prices continuing to climb, and we're definitely in an area that is seemingly unsustainable. Are we going to see a 2008 style crash? I don't know, it doesn't seem likely, but it does seem like this is an area where we might see a little bit of consolidation or maybe slight pullbacks. It's also worth noting that even after the 2008 crisis, at this low here, we were at 34%. And in 1998, even into 2000 here, we were below that area for basically that entire time, and we never got back into that zone. So it doesn't mean that we necessarily have to get back into these previous lows, but it does seem a little exaggerated currently. Moving over to the economic calendar, there is nothing for Monday, but looking at Tuesday here, we have core retail sales at 8:30 Eastern. We also have headline retail sales here. Looking at Wednesday, we have building permits, as well as the FOMC minutes release at 1400. That's definitely going to be a little bit interesting. I'll be looking for something like if they're going to maintain 2 more hikes for this year, because the markets definitely have not priced that in. We've talked about that before. We have Philly Fed manufacturing on Thursday here, Fed balance sheet. That one actually went up slightly, $1 billion. It's been on a steady downtrend, but we didn't see that last week. That'll be interesting. For Friday, we have core and headline CPI for Europe, and then nothing here for the US really of interest. Moving over to max pain for this week. This is a 3rd week OPEX. You can see there's 2.7 million options already in the market. Put call ratio at 2.25. Max pain all the way down at 438. Current stock price 445. So 438 all the way down here is a big move down if we were to get a max pain finish. That means these 440 puts would make some money. 450, fairly decent call wall there. Put wall down at 430. I would definitely not expect to get below that level for the Friday expiration. You can also see there's quite a few calls at that level. If we get a max pain finish, that could spell much lower prices over the next week. Moving over to the charts, it does spell that we are going to get lower prices here. You can see 2 weeks ago we had that big red bar. We did get the continuation, not a huge continuation, but a small one. Down about 1/3% on the S&Ps. It was down much more on the NASDAQ. We're stopped right at the 9-week moving average, almost to the point. And if this uptrend is going to hold, it basically needs to bounce from here. And we could absolutely see a double top or a lower high setup. even in these shorter term pullbacks that we've seen, we had 3 weeks of downward movement, big wick low before getting a pretty decent retrace. Then we obviously had a massive leg down after that, and it wouldn't surprise me if we got maybe another pullback down to trend or a close down at max pain, back down at these previous lows around that 438 area, finish right in that max pain, get a bigger move higher the week after next, set up that lower high, and then we see a bigger pullback down to the 21 EMA sitting around that 4300 area. Zooming out for a moment, I do want to highlight this longer term trend line right here, currently sitting at that 4428 level. If we pull back and wick that level, it might find a little bit of support, and that's definitely something to watch going into this week. Zooming way out here, you can see that trend line that I was talking about marked all these peaks in 2007 before we ultimately had that bigger drop off. Moving over to the daily chart, you can see this rising wedge that we were in. We've now broken down out of that rising wedge. You can see this thicker trend line marking the tops going back to December and February. We broke that this week as well. We've broken below all of the major trend lines that I've been watching. Right now you have the 55 EMA sitting at 440 on the daily chart. Also have a horizontal support level right there. And zooming in, you can see what I was talking about. This is that bigger trend line that I was watching. You also have that wedge support right in here. Wicked those highs, wicked the 21 EMA on the daily chart, and then broke down from that level. That's usually one of my favorite setups. Retest the 21, get the breakdown, pushing down to that 55 EMA. And like I said, right in that 440 area. We said max pain was sitting just below that, around 438, and that's right at this support level before we had that most recent run up. So definitely an interesting level, and I would expect to get into that zone at some point this week. Moving over to the NASDAQ on the weekly chart, you can see those two big legs down that we've had over the last 2 weeks, 3% on the first week, 1.62% on the second week. So overall, 4.5% down between the 2 weeks. Momentum definitely weak, RSI pulling back. You can see I do have a trend line sitting down at 14,650 or so, which would be a pretty substantial move down from current prices. That'd be about another 2.5% lower, which would be a solid leg down before we found support. You also have the 21 EMA sitting down at 14,250. Again, that would be about another 2.5% down, so another 5% before we find major trend support. So everything looking pretty bearish here. No longer term trend lines to watch. This level has broken, and there's a decent amount of room to the next lower levels. Moving over to the daily chart, you can see that same rising wedge type setup, the same breakdown, but we got very close to the 55 already on the NASDAQ. It has been much weaker. And zooming in here, you can see that high, lower high setup, the breakdown all the way to the 55, and then we dojied just below it at this previous consolidation low. We've been watching 364.84 for a while now. So once that 367.63 broke, that was the next level that I was looking for. And it does seem like we're at that level now. It did hold, so you do have to consider that. But everything still points to more downside, bearish momentum, bearish RSI, not oversold yet. If the S&Ps start to set up their actual topping formation, looking for a retrace and a lower high setup, then we should expect to see the NASDAQ do a similar move, potentially come up here, retest the 21, sitting up around 376. That would be interesting, and then you would expect a continuation lower. But we already had that kind of culmination on the NASDAQ, and it does look much weaker than the SPY. Moving over to the Russell on the weekly chart, similar to the NASDAQ, two big legs down. Touched that 9-week moving average at 189.56, and then got a little bit of a wick rejection. But again, this looks pretty weak. We got into that same zone where we got 2 rejections here previously. Both of those ended up pulling back significantly. The second pullback was a higher low versus this first pullback in October. So you could absolutely see a higher low setup, maybe pull back down into this 185 area or all the way down to the top of this consolidation at 179.17. That would be interesting. And then I would expect some kind of support to come in at that level. You can see the EMAs and SMAs sitting down around that 182, 183 area as well. Then I did have a trend line right in that same zone at 185. So certainly could hold right here. If it's going to, you have to watch for that. Otherwise, you could look for another breakdown, about another $5 lower or so. Moving over to the daily chart just for a moment, you can see that downtrend, big wick, very close to the 21, hit VWAP, and then broke down further. Then we gapped down and then ended up slightly positive on the Friday, which is interesting. So a little bit of strength coming through off of that 9-week moving average, very close to these previous highs. Momentum and RSI are still bearish, but it is something to pay attention to. Moving over to the Dow ended up positive on the week, about 0.75%. Momentum, not bearish, but not gaining either. We were basically sideways all week, and you can see that here in the doji, not giving us any kind of clear direction. Trend is still bullish. We're not even close to the 9 EMA. This is definitely one of the stronger major indices right now. I think it's mostly being held up by oil and gas companies as well as financials, whereas the S&Ps and the NASDAQ are being pulled down by tech as well as semiconductors. Moving over to the daily chart just for a moment, you can see that move down, consolidation. The EMAs have not crossed yet, so this trend structure is still intact. Hit this level multiple times, held it all week, hit this level to the upside multiple times, held that level also. So we're still holding in this zone. Moving over to the equal weighted S&Ps, you can see here we got a slightly down move, 0.05%, basically flat. And this looks like a blend between the Dow. So the S&Ps were down a little bit, the Dow was positive, so the equal weighted was basically flat. Hit that 9-week moving average. We still broke down from this rising wedge, but we're at an area where we could find support, again, supporting the thesis where we might find a little bit of a rally, maybe a lower high or a double top type setup before we see a bigger breakdown. Even with this move here, we had a move lower. The next week, we wicked that high before we had the continuation lower. Doesn't mean that it has to happen now or that it's going to happen at all, but it is something worth watching. Momentum pulling back, RSI still above the 50 line, so definitely stronger than the NASDAQ, but not looking super great. Moving over to copper divided by gold, you can see it sold off this week, down around 2.5%, just like everything else is selling off. The question is, are these going to come back together? So I have the S&P 500 here in orange, and you can see we were pretty well correlated at the peak here, moved down together, kind of consolidated together, and then tech started running up and industrials started moving lower, and you can see that here. Usually at some point in the future, they're going to come together. The question is, where is that going to happen? And with copper moving lower, it does seem like we might see a bigger drop over the longer term with the S&Ps. Moving over to the ratios, looking at the NASDAQ SPY and NASDAQ Russell, you can see we had a big leg down on NASDAQ SPY. Obviously, the SPY was outperforming. The interesting part here is that the NASDAQ Russell was basically flat. So we had the Russell moving lower while the SPY was holding up a little bit better. Interesting. Still expecting both of these ratios to go a little bit lower. We have the 21 EMA on the NASDAQ Russell sitting at 775, and then the 21 over here sitting at 332. So that's a couple of points lower that we need to watch for. Bearish momentum on both of these. So we're still seeing NASDAQ underperformance. Don't need to be too aggressive if you're trying to trade some bullish movements on the NASDAQ. I do expect it to underperform until we see these ratios find a little bit of a stabilization and then some kind of retrace. Moving over to SPY divided by the M2 money supply, you can see we hit this peak high, going back to the all-time highs. We hit that level once again, and we're pulling back once again. Makes sense. Momentum pulling back more. RSI below the SMA looks weak. We're stuck right at that 9-week moving average. We're just 0.01 below it here. You can see 2144 versus 2145. So we are technically below it just by a little bit. You can see I have a level here at 2122. Certainly should get into that zone at least with a wick this week. And then if that level breaks, it's a pretty significant move down that I would be looking for down to around 2070 or so, and then horizontal support at 2050. Got the 21 EMA sitting at 2059. So pretty big move if this level breaks right here, which I do expect it to at least at some point. You can see last time we were in the zone, it did take quite a few weeks holding in this area before we saw that bigger breakdown. But once that level broke, it was a significant move lower. So definitely something to pay attention to as we move into the next month or so. Moving over to Apple and Tesla on the weekly charts, both of these look pretty awful. You can see that earnings week for Apple was the down 7% week, and then it was down 2.3% here this week. We're technically below the 21 EMA on the weekly chart. That's at 178.23. You can see current price 177.79. So we are technically below that level. So we don't have trend support on the week until we get to that 55 EMA, which is all the way down at 159.88. You can see I have a couple of horizontal levels that it is still respecting in the shorter term, but you definitely have to consider that the 55 is so far away on the weekly chart with bearish momentum. RSI not quite bearish yet, but it's moving in that direction, and volume over the last 2 weeks was pretty high. Moving over to Tesla, very similar thesis. Momentum continues to move lower. RSI crossed the SMA. Not quite bearish yet, just like Apple, but it does look weak. We're below VWAP and we're below the 144 EMA now, which means we should be pretty clear to my price target at 232.84. And then the 21 EMA is sitting all the way down at 220.23, which is not that much further below my horizontal support. Overall, both of these look very bearish going into the next week. Moving over to Microsoft and NVDA. Microsoft down a little bit more than 2%, hit that 21 EMA on the weekly chart, held that level, so it's still technically in an uptrend. Could hold this level and bounce, but it doesn't look great. 3 bearish weeks in a row, typically a good indicator that we're going to see more bearish momentum with some kind of a retrace before that happens. Momentum is bearish, RSI looking very similar to the previous two. Not quite bearish yet, but moving in that direction. NVIDIA had an absolute bloodbath of a week, 8.5% down. Definitely looks bad. Momentum about to turn bearish for the first time since October of 22. So this has been an absolutely colossal run of absolute bullish momentum for the whole entire time. Super uncommon. It was due for a pullback. You can see we're just barely below VWAP on the weekly chart. Got 405.30 as a potential area for support. You can see we made that level here in June. If this level breaks, however, we should be expecting a much bigger pullback down to 375.85. And then the 21 EMA here is sitting all the way down at 362.05. So looking pretty weak in my opinion going into next week. Moving over to staples and discretionary. Staples, absolute doji on the week, up 0.2%. Held the 9-week moving average. We're technically in a downtrend, but both of the 21 and 9 EMAs are moving up at the same time, which is kind of unusual. Usually that only happens if the 9 is above the 21-week moving average, but that's not the case here, so that's kind of interesting. So technical downtrend, but holding in the zone right now. Discretionary, on the other hand, we had a clear move into a resistance, pullback, retrace, and then wick rejection, moved lower, hit the trend line, which held for just a little bit, and then the next week was a bigger move lower. We have now taken out that 9-week moving average, looking at trend support down around 166, and I would expect discretionaries to continue lower into next week. We crossed the SMA on RSI. Momentum is looking quite bearish. Moving over to the sectors here for the last month, you can see energy being the massive outperformer. We have healthcare doing fairly well, Dow also holding up. Then you have communications and financials still doing quite well over the last month. Definitely a switch from what we had been seeing with semiconductors leading the way. Now we see energy pushing up quite strongly. Moving over to transports on the weekly chart, this was a classic setup. Hit the trend line to the penny, rejected from that level 2 weeks in a row. We're still above the 9-week moving average, sitting down at 252.74. So this is still definitely an uptrend, but a clear pullback into the zone. I have a level at 251.77. We'll see if that ends up getting tested. If everything else continues to move lower, I would expect this structure to break down at least a little bit, but right now it's still intact. Just looks like a pullback in an overall uptrend. Moving over to the 50 and 200-day averages on the weekly chart, you can see the 50-day average has had 3 weeks in a row of downward movement. This last week was actually a little bit stronger than I expected. We took out these EMAs and SMAs even on the daily chart, still holding above 52.81, but if that breaks down, we could see a push into these bigger lows down here. That would be interesting. 200-day average still moved lower, but looked more like a doji, showing a little bit of strength at that 200 SMA sitting at 58.72. That level is a pretty consistent area. You can see anytime we get into the 200, there's definitely a reaction. And that zone in particular marks a couple of tops and bottoms here recently. So not surprising. That also kind of fits into my thesis where we might see a little bit of a double top or a lower high setup on the S&Ps over the next week or two. At this point, it seems like this week might be another bearish week. Find the 21 EMA sitting at 55.81, bounce from that level, set up the lower high, and then get a bigger pullback into these lower levels. Maybe retesting these lows down around 36 on this chart. That would be interesting, but definitely in an area where we might find some support going into the next week or two. Moving over to yields, I talked about this in the Friday video, but I do want to highlight that they are both going higher here. Higher yields could spell lower prices for equities, or at least some volatility in the short term, so keep this in the back of your mind. Moving over to the dollar on the weekly chart, you can see that strong close. We've been in this zone for a while, so it doesn't necessarily mean anything, but a close near the highs right at the level. If it's going to break, you want it to push up, which would spell weakness for equities in my opinion. You can see we got some bullish momentum for the first time in 4 weeks. We're also above the 9 and 21 EMAs here on the weekly chart, with the 55 sitting all the way up at 105.05. That would be interesting. That would be a huge push. That would also put us above these previous highs going back to May. So definitely interesting here to watch on the dollar, showing some strength. Moving over to JNK and TLT. JNK has officially consolidated its shorter term EMAs on the weekly chart. You got the 21, the 9, and the 55 all sitting on top of each other, as well as VWAP. If we're going to see a little bit of a breakout, you'd want to see it now. It's been consistently making higher lows, and it does look okay. TLT, on the other hand, obviously falling through the floor, looking to these previous lows, down around $92 to $93. Yields are going higher, and treasuries are going lower. Moving over to the VIX, you can see we had an up week 2 weeks ago, ended up getting a down week this week, but we did throw a little bit of a wick higher. You can see that here, up week, down week, bullish momentum still, and you can see this slight uptrend that I'm kind of watching. If this trend line continues to hold, we should expect another leg up next week, which does correlate with the max pain that we talked about. If it does break down, we might see a push back down to these 1177 area where we saw previous consolidation, and then we saw a bigger move higher from that zone. So definitely interesting, watching for the breakdown, but like I said, still watching this slight uptrend. Moving over to my accounts, I did not do great on the week, down around 2%. I did decide to add some money to this account over the weekend. I might start adding to this a little bit more consistently. We'll see how it plays out here. But otherwise, not a great performance with the markets going down. In terms of positions, I have an IWM put here at 191. Very tight stop on that position. Qs, I have a put at 366. I did sell 2 calls against that position, protecting myself to the downside a little bit. And I do have a big credit there at 171 on those 366. So effectively buying the stock almost $2 lower. We did show a little bit of strength in the Friday session, and I did talk about that in the Friday video, so definitely check that one out if you want the shorter term analysis. So I do have some positions just in the short term, looking for a move on Monday, but overall I think the close for the week is going to be weaker. Let me know down in the comment section what you think of oil and gas. Can it continue to rally? Are we going to see increased demand with no increase in supply? Or of course, comment on anything else you thought was interesting during the video. Of course, like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.